Hi guys, welcome to another weekly market analysis. It's Sunday the 6th of August and it is 5:16 p.m. here in the afternoon. I'm actually going to be on holiday now to Turkey for 3 weeks. I may be able to post on a Sunday each week. I'm not sure. You'll have to forgive me for that one. Welcome to all the new Discord members. I know it's a little quiet and it's a little early as well, and quite a lot to take in at the moment if you're watching the analysis. I'm slowly working through the videos. Video number 5, the chart patterns, is out there. You must watch all these videos. I try to make them as short as possible, but you must watch them all the way through in the Discord group. I've got up to 20 videos to make in total, so it's going to be a few months because I want to get it across in the best possible way and the easiest possible way for you guys to understand. So, without further ado, let's just get into the market analysis, and I'm going to start with the euro dollar. We'll look at the majors first, and then I'll move into some of the cross pairs or the minors. So let's just clean all this up. First of all, we'll start with the euro. Now I'm focusing not so much on these big patterns, okay, like almost as if you're going to invest, but more on what's happening in this most recent area. I am keeping an eye on this sort of thing where we've got a major sort of support resistance area because of this break of a trend line, and we could be rolling over, we could be pushing up. I don't know, and if I was trading this longer term, I'll be looking to get in somewhere at this level and hold. That's just too far advanced for trading. That's more investing. So what I'm looking at now is the monthly top-down analysis here. Start with a monthly on the euro dollar, and I'm looking for a pattern to trade. First, my higher time frame setup is going to be the pattern, and at this moment, there's nothing decent to trade on the monthly because of this messy range style market, pretty much an ascending flag, so to speak. So we've got this kind of pattern going on at the moment. We need to drop down to lower time frames to give us an idea of what is actually taking place. We do have this base drop supply level, which I just want to have a little look if that is a original level. Yeah, it's actually a fresh and original level. So, it's going to have a bit of a response that we've had. We've got this monthly big closed wick now. Now we're into the new month. What's going to happen here? Who knows? We could have a strong rally before dropping. It could continue this slow grind in uptrends. Let's drop down to the weekly. Let's just see if we can find any patterns to trade. Because I try to treat each time frame individually, and then I will look whether the patterns match the upper or the higher time frame or the lower time frame to find opportunities, because opportunities are every day, every week, every hour, even every minute. If you know what you're looking for, it's the profit margin that makes a difference. So on the weekly, we've got this, what we saw on the monthly. Okay, we've got this slow grinding uptrend. It is a channel, but very gentle channel, and we've got this base rally. Now we've taken out this high. I know we're bouncing from monthly here, but we've taken out this high. We may have a nice trade up to here. Okay, so we've got the monthly level to be careful of. This is why my profit margin is going to be here. My trade management, there's multiple trade managements, but my trade management on this will be probably to manage the trend to the upside, managing the trade under that nice and gently. My normal trade management, if I wasn't hitting any higher time frame area, would be when price moves to 50%, then stop goes to break even. When price moves to about 80% of the move, then stop goes to 50%, and then I let it play out to hit target or hit stop. Unless we're ideally pushing really hard and fast towards that target, I'll manage it on a lower time frame if I'm around, and then I will extend the target and manage it that way to see if I can squeeze or allow it to get past the high. So you look at the high of the actual candle, it might get past and just keep, it doesn't just break out, it just momentumly flies through with strong volatility, boom, up movement. And maybe I can manage it on a even lower time frame to squeeze in a bit more on that reward to risk. But this is what I ideally like. So if I set anything, forget it and leave it alone, I get in, I get out here. Now when you're looking at the higher time frame, the ideal place for a stop is going to be all the way down here. That's it. Now that reward to risk is only about a 1-to-1, okay, or just over. So that's not what I want to do. So I need to drop down now to the lower time frames. I'm normally jump straight to the 240. I'm just going to have a look at the 60 because I'm trading what I see, not what I feel. Okay. Now this is what we got going on at this moment on the euro dollar daily chart. Okay. We did take the trend line out from here to here. That's been taken out, but we've not removed this weekly / daily because it's a rally based rally. This is the first pullback. We've not created a pivot swing low pushed higher, but I've got to be aware that the monthly is starting to attack here. I'm just being aware of it. We can't, you won't trade if you just add every supply and demand level up. You won't take a trade. My bias is still long, and the reason why, if we look at this here, when I've drawn this trend, we've pushed up here, and from here we've pushed slightly higher. This is actually a trend line, okay, as well. Not just this, but also from here. So this is a hurdle to get through. If price starts to break this, it really needs to take out the low of the weekly, and then we've got another trend line to get through. I believe this bigger one. Oh, we're already through it. Oh no, sorry. Let's add in the weekly one like this. That was that trend line. Let's add the weekly one like this pattern. I'm just going to refresh this because the markets are not open. My trend lines will jump about. And now that one's gone. So yeah, so I'm watching this here, AB, and if we zoom out, I don't really want to pay too much attention to right the way down here, but I still put draw these trend lines in. We're still above that overall rally, big base starting to rally. So this could potentially continue higher from this area. One more thing I'm going to look at now. Now I've done that, I'm going back up to my monthly because I'm looking at the daily as an ABE entry right here. I've not actually taken this one because that would have been the ABE, the first trend line from this pivot low, which had a bounce, but it is still an ABE. So I need to go to the monthly, and I want to look at my monthly candlesticks. I'm adding a bit more in what we're doing on the Discord group here. So I'm looking at this is an inside close candle on the monthly. I'm going to enlarge that. It means we didn't take out the high of this candle. Okay, this whole lot are inside closed candles on a higher time frame, but we want to just focus on what we're trading right here. So if I look at the low of that candle, it's exactly where this red line is of this inside close right here. This is the first one. This is an inside closed candle as well. So I'm going to put in the low of this candle right here. So these two are inside closed candles. What I mean is that we've opened inside the range of a previous candle, okay, and closed. So we've opened, moved up, and closed. So we've got this area. I'm going to move this profit target into the extreme high. So analysing the candles on the monthly is telling us we're into some kind of accumulation on the monthly, okay? It's a big fucking accumulation. And going back to lesson 5, which is not up on YouTube, it's only in the Discord group, it's about the chart patterns, and this is what I'm looking at. Patterns to me are also candlesticks. I'm not just talking about conventional patterns that we can see here, flags and wedges. We do talk about them, but we're also looking at the candlestick itself, and then we go down to the lower time frame pattern to see if they match. So this is what we got. We've got a range going up we've got the low of the weekly inside candle, which is actually, we can get rid of it on the this is the monthly candle, sorry, but if we come to the weekly, let me drop down to the weekly, we've got some inside candles here, which is where the basing area is. So price is coming back, so it's definitely a demand level. So we want to be buying here, but there's a chance that this could be taken out quite easily, only because, I'm going to remove this one now, only because of the monthly inside candles. When you're trading long term, so if we're trading this monthly now, that's so that's the open color there. When you're trading the monthly, I don't want to be short into up here and buying till down here. This is becoming a range bound market based on these two candlesticks alone, because the inside close. Yes, they're moving up. We've got a pattern. Yes, we've got this trend line, and you could say we may be starting to move up in a channel, but this is the area. I'm going to move that down a slightly bit low onto the low of the previous candle there. These are the extreme areas of range-bound supply and demand. Now, this is not range-bound, I can see that. But if price drops and takes all these out over the next few weeks or few months, this is my next buying opportunity down here to come all the way back up. Now, if price is rolling over on the monthly, we may only get a 50% retracement and it starts rolling. So I understand that, and I will manage it differently. And right now, though, all I can see is an a B from down here on this daily, which is this A. Why is that gone again? I have to refresh. And we're starting to potentially break. So that's the AB kind of E, this little ABE. The rally-based rallies all been taken out, and we're moving down in towards this deep weekly level. So all I'm going to do is watch this downtrend to break, because this is what's telling us now. The daily candle is telling us what the monthly is doing. And we've got an A, a B, and an E. And I pointed this one out on the Discord group because I'm looking at potentially price breaking it. Potentially, okay, because we're bouncing from this level. So now we've come in from this big weekly level, a breakout to above, and if not, we want to be selling and then looking to potentially go long down here. I'll go into that in a moment. So let's recap one more time. Monthly, big potential range. We've reached that big monthly base drop supply, fresh and original. It's not fresh now, we touched it, so it could be rolling over. So we're in a higher time frame accumulation, which means you're going to see anything on that daily start to get broken. You're going to see it happen. You're going to see bounces. You're going to see supply levels working, then failing, demand levels working, failing, just going through it. You're going to get fucked about. When you're using the combos like a monthly, and the monthly's in an accumulation distribution, if you want to call it as well, it doesn't matter which one it is. They're both the same. Either people are loading their position or unloading their positions. You're going to see a lot of fucking about on the lower time frame supply and demand. With that said, I can only follow the rules until price tells me otherwise, and we are bouncing from here, which means there is a potential now for this to be broken. This is the nearest area of base drop supply. I'm trying to do like a big top-down analysis on this. I'll move quickly through other pairs. And price is bouncing. I've seen these. You can look at these. As long as you make a high, this is still an A and a B that's not being touched. And because we're quite low and into the weekly, there's a high chance this is going to continue higher. But right now, I don't want to be buying. I want to be buying if we get above here. Now, it could be breakout. It could be a pullback and then a continuation. That's a setup for me. This is becoming that flip zone area at this moment where we're either going to continue lower or we're going to break above it. And if we break, I might just take the breakout and see what structure forms, because we're in the middle of that monthly accumulation. Okay, this could just fuck about here, and all this technical analysis will paralysis by analysis. Okay, so I understand sells here. And if I come down, because we're bouncing off this trend line, until we remove this supply, I can't really look for buys on this time frame. But now let's have a look at the weekly again. It's the higher time frame. Let's do it this way: rally, base, rally, weekly. There's a little ABE on that daily / weekly, but we can still go long anywhere in this position. Now I'm going to drop to the 240, and we're going to analyze the 240 because we know we want to go long. We've got this big, this is the daily / 240, but it's more in between the two. So we've got to be aware of where we are. Hence, buy when we're above it, looking for breakouts above this level, or let price come back, and this is a valid area to buy from. So this would be my first area of, let's say, looking for failure. Okay, if I'm going to be stopped, this would be the first area. And not only that, I've got on a 60, I'm going to draw from here, we've got an ABE. And if we go from the very low and look at this, high, pull back, higher high, we've got that trend line. So this is the level area. If it gets right down into that area and we're not, so when it comes down here, we're not below the level or below the trend line, then I'll be looking to buy. If it just faked, so we're here, it just faked out, I'll be watching on a 1 minute, just in this little fake out area, so I get my low risk. So if I'm going to buy this ABE on the 60, my target's going to be up near that area. If we put it back to a 240, so I'm going to buy it as a 240, the target is still going to be that same sort of area. Now, my question is, that's my standard technical analysis. We've got this big ABE that price might be rolling from now, might take out this level, come back and drop lower. That's another scenario. There is still room to fall. If I was day trading this, I'd only be shorting at the moment. So we've done the weekly / 240. We know we want to be going long in these areas. We've got a nice 240 and drilled down 60. Nice level there. So I'm going to watch that one very, very carefully. We've just done that. Now let's look at the 240 at the moment. 240 now is, because we took out these supply levels and made a demand level, and if we look at the 240 recent candles, that is a flip zone area, okay, right here. This is demand, supply, and now this is demand, and we took out a trend line. So quite a powerful area. But I don't want to be going long to here, and I don't want to be going short to here, which we already are, and I don't want to be going long until above this level and the trend line with a breakout. And the reason I look at breakouts and they're managed differently short term is because we might not get the retracement, okay, and we're going with the trend, okay. So sometimes the price just keeps going. You just get a nice 60-minute boom, 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 rally base, rally, stuff like that. So above this particular level. So that's the 240. Now let's have a look at, if we're looking at this as an ABE on the 240, which is what I put in a Discord group, and I did get stop out and I got in again. I didn't get time to post it, and I've taken my profits off already. And I did try and get in again a little bit more and took a couple of little losses, so I stopped. That was me intraday trading there. So let's have a look. We've got an ABE. What was this move up? What trend was these 240-minute candlesticks? Let's have a look to the 15. Strong rally base rally pullback. We actually took out a little bit of demand and continued higher. So this is a very strong momentum move. And the reason we're seeing these kind of moves that don't make a decent pattern is because we're in the accumulation on that monthly. Really, really, really big area. So you're going to see some really random moves. I'm just going to come down, or go up, sorry, to a 30-minute, because this is more like it. We've got this strong move, pull back, and price is pushed up. And from the low, that was the momentum move we had. So let me go back to the 15. Let me go to a 5. And do it this way. First, pull back here. And not really a decent one, but we've had this rally base rally, so it's even a 1 minute, but we've got this. This is what would have been looking for at that 240-minute touch right here. You'd be drilling down, looking for something like this. Once the this is a tiny bit of demand removed, there's the flip zone. I'm just going to draw it in and remove that one after. That's the area, and this is what I was shorting. In fact, I was shorting here. This is where I took my losses, because this is the first one. Remove demand, price come up. You can see it was trying. Price come up, took, and then boom, pushed higher. So I drew a new trend line in, right at the area. Price pushed up, created a flip zone, removal of demand, and we had this supply. So then I just kept adding to positions down here to about 4 positions, and then managed it. Got out here, which stopped me out because I was managing above these candles. In fact, might have been the 15-minute, no, it was the 5-minute, and then I got stopped out finally here after getting back in again. And then I stopped trading. Then this happened because it's right at the market close. It just, so I'm glad I was out, done the right thing before the markets close the end of the week, or even during the week. You always get here in the UK at 2200. I want to be out by sort of not at 2145 because I know we're going to get the temporary clearance going on, reopen, and there could be gaps in the market, spread widens, all that crappy stuff that goes on for about an hour or so while they sort their orders out in the big world. So coming back to that 5-minute, that's been done. So I didn't hold the trade, like I said, because it was Friday. Now, if it was been a Monday or Tuesday, Wednesday, I probably would have took off half the position and maybe managed it. Okay, that's all I would have done. Maybe stop would have been a break even. But I was just trying to recuperate a little bit of losses, which I did, and and I just wanted to take my profits while I could. So what does that leave us? That was what's happened on the Discord group. We've got this, look, big green candles up and big red candles down. The only thing I'm going to do is wait for down here for longer term trading, or wait for the break above here. Yeah, there could be a pullback, but the chances are if we pull back to here, I'll be watching the breakout. Okay, we could have a double top. It is potentially there because we've taken this out, so price could come up, so I'd watch careful in this area. That's the only area to go short again at this moment. Okay, there is a big trade from here to here, profit margin where we are. Okay, where we are, profit margin, come up, come down, then it might break higher. This could be accumulation. In fact, if I go to a 4-hour, I can see what candle we got. There we go. Now, because I'm looking at that lower time frame, we've got an inside candle. Okay, which means an open and close inside the previous candle. So there's the high. That's price itself with the spread. Here is the low. Okay, so because I'm looking at dropping from here, this would be the breakout area of this low. Okay, so a close below here on a smaller time frame pullback. I got a timing rule, which a video I'm making allows me then to go short, maybe down to here. So that's why I said day tradings are looking to short. So let's have a look at the extreme. Well, that's exactly what I just said. Trade the extremes when you've got some form of potential accumulation, and the 240 is showing potential accumulation. If this was going to really drop, it would have took out this low. So we need to be below here for continuation of a downtrend, or up at the extremes with a potential of a fake out. So we're in that breakout, fake out area. So what do? I'm just going to move the line a little bit higher, because I'm going to look here to the left to see if there's a fresh and original levels. Because what I do, if price suddenly strongly rallies here, everybody's looking at that breakout. If there is a fresh and original level on here, a 30 or 15-minute chart, or even a 60, I'll have a set and forget. I will fade the breakout. If I get stopped out, then I'm looking to go with the breakout. If I get stopped out, I'll leave it alone because I need to let it settle. I need to reanalyze. So let's go to a 60. And look, there is something going on here. I might need a 30. So I'm going to scroll back. I need a 15 then, because I can use a 240 15. There is not really anything for me to fade out to. If I go to a 5, I think I'm becoming a little bit, it's becoming a little bit too low. There is a 5-minute level here. There is, but it's not what I put a set and forget. But We'll put this one in because I think price is going to be, we'll have a liquidity sweep for this first before either moving down and moving higher. There is the whole wick here. Now, it's definitely fresh. We've not touched it. It's definitely original. It's a fantastic little level, this little 5-minute level, but it's a little bit small for this 240. And in fact, I need to go back to that and bear with me one moment because I need to be seeing this on the higher time frame. Keep going all the way back. Okay, I'm going to delete this one now for a moment so we're not confused, and I'm going to change this one in the properties. Parameters, where's it called? Visualization. Just show on the 60, 15, 240, and the daily for now. So that should show. There we go. On the 60, on the 240, it's going to show. So now I can see that area that I'll be looking for shorts. I'm not going to put a set and forget on. Actually, I probably will set and forget right at the extreme here of about 10 pips, because then I'm expecting to come down to here at least of 92, 91 pips. I'm going to be 9 or 10 to 1. So that's where I'm going to put a little limit order on. The thing is, it might spike through and stop me out and come down. So if I'm watching it, which I doubt I will be, I'm on holiday, that's why I will put a little limit, then I'm quite happy to get out a 9 or 10 to 1 down here. Maybe take a 7 or 8 pip risk here if I can, and it'll be a 10, 12 to 1 trade. Okay, that's what I'm looking at the moment. Now, if price doesn't do that and continues lower, we've got a 15-minute level right here. But like I said, we're in a 240-minute range area. So what I want to see happen is this is the low of that. Is that the low? Let me just double check that line. Yeah, basically where we closed. So I want to see price come up, hit here, and take this out. Or close lower, ideally, close lower here on the 15, then rally, and I'm watching the timing rule because I'm expecting a strong reaction. If it starts to come up here and then pop its nose above and all this, I'm not trading it. We're dealing in the middle of that 240-minute potential range. So if the range is happening on this, if there is going to be some more wicks and inside candles here, rally, base, rally, okay? Or rally, base, fake out, drop, strong drop, maybe taking this area out as well. So I'm looking for shorts here, longs down here. Very long, very complicated, I understand, but these are the rules that I have made 100% to keep us looking for these opportunities. Price comes down here, then I'm going to start looking for longs. This, I'm not going to analyze what will happen if we come out like I have up here. I will do that when each daily to 40-minute candle closes, because it gives me information on my higher time frame candles, lower time frame structure. Let's go and have a look at the pound then, because that, obviously, that's where the effort comes in. It's worth working on one chart. 1 or 2 charts, because when you try and analyze fucking 30 pairs like this, and then you've got to go back and check when price is changing, you're getting frazzled. My brain gets frazzled. You need to focus. I find the best pairs to trade that week and I focus on them. I just want to see what's happening. I'm expecting what to happen. What it doesn't happen, or if I get stopped out on that week, fine. I analyze again like this, hit the reset button and focus on another pair, and then I'll get a fantastic week or 2 or 3 like I did early in the month. I get those, and then it goes a bit, a little bit shit maybe, but this is the way to keep me psychologically in check. So let's have a look at the monthly. Let's analyze the pattern first. What we got? Nice strong momentum. We haven't really had a decent pullback to draw a proper trend line like this. I'm aware of that, but the momentum is to the upside. Nothing to really tell me on this monthly, except we've got 2 inside candles now. So I'm going to be mapping off this as the trap liquidity sweep area. I'll tell you what, I'm going to change my lines to blue so it is different. it's going to be different from my bid and ask. So what I'm looking at with the candlestick is potentially this inside candle. In fact, let's have a look when this was. This closed 26843, and what's the high of this? No, that's all right. That's a normal candle. So these are the two inside candles. This is a rally base rally. We've got a big wick. So I don't want to be selling ideally to up in this area or faking out. When we're going long, I'm looking more for the breakout as well. Let me make that clear. There might be a fake out here, but if we get above here, I'll be more inclined to look for a breakout because we're going with the trend. I tend to fake out against a high time frame trend like this and break out with the higher time frame trend. So breakout, fake out down here. Okay, you want to fake out against the trend, break out above it. And if you stick to those alone, you will sometimes miss some opportunities, but it will serve you well. You'll certainly save yourself from losses. So I'm looking for potential liquidity sweep below. Anywhere in this green candle, there could be some kind of, and it's demand, some kind of fresh and original supply. And if it lines up with an ABE, even better. But that's where it could happen just under this line. So let's have a look straight to the daily. So I'm doing my monthly daily kind of analysis. And we're going to draw this big trend line, which we've already taken out. Okay, so looking at the daily, there's no ABE, but this is still the range. So we've got this bit of a 240 downtrend. We have got a nice rejection wick here, so we could, boom, drop a bit lower. Now I want to just get below this and see if this area is a fresh and original level. It's not. It's definitely tested already a rally base rally. That's come back, almost tested it. We've tested it. There's nothing decent below, not even down here. So I'm not going to be looking for a fake out to the low side. I'm not going to be looking for that. What I'll be waiting on now is, or already happened, at that line is a break and a removal of this of supply. So I'm now using a monthly, a daily, and dropping down to this sort of 240 structure that's coming in. We've also got this structure, which would be like a hurdle to me because this is the first decent structure trend line break. So let's start again, monthly, because otherwise people will start losing track. Monthly, low end, I want to be buying down here, I want to be selling up here. So where are we on the weekly? A little bit high, but we're down in this area. We've got a rally, kind of drop based rally on the weekly. Just want to point that one out. And the daily is showing some rejection candle. There's no trap below, so price could still break low, but there's nothing I can do until we start to take out trend lines. So on the monthly, daily, the safest bet is to wait for this trend line to be removed and wait for that to be removed. Okay, that is the safest bet. And once that happens, a pullback for a double bottom would be my kind of setup because we're at the extreme of the range. Okay, so I'd be looking for pullbacks at double bottoms. I would be looking at a 240, basically an ABE, but the chances of that getting taken out because of the higher time frame accumulation again is quite highly likely. So let's just go down and do a weekly slash 240 analysis. So let's have a look at the weekly. Now we're into, and it's good to have multiple charts on one particular pair, so you can then keep everything in unison and you know where to stop trading, when to trade, and so forth. So we're into weekly rally based rally. Okay, here's a trend line, sort of touch area, fake out area. There is a breakout as well. If we get below this level, we could start to look for shorts, but we might have a flip zone. What was demand becomes supply. We can see already there is potentially some supply forming, but it's not there yet. It's It's not supply till we take out demand. So I'm looking to trade up to a solid body candle. This is the nearest one, but if the monthly is going to continue higher, that'll be the higher the range, the target area. But I'd be looking to take off some of my position here. Okay, so let's drop to the 240. So we've got a break of the trend line. What was demand? Supply becomes, we'll do it to this inside candle. Now you see why we're using inside candles, or basing candles we call them. I mean, this is not an inside of this, but it's more inside from this move here. It's the other side, and we've got all these inside basing sort of candles here. So this is a 240 slash, it's not even a daily yet, maybe an 8-hour chart rally, inside candle rally, base rally. So I'm looking at this as the flip zone. So ideally, I want to get down into this kind of area. That'll be very nice. And now I need to watch what structure is on this time frame. In fact, I just want to check one more thing. Yeah, because we've got nothing else. I want to watch what structure is on this time frame to come in to bounce, and this is going to be my first target area. So ideally, you would put your target. Ideally, you put your target there, but it could stretch up a little bit higher because of this. Come back to the weekly, because of the weekly candle. So very safe target here. Very, very safe. There is a level of supply, but I'm not worried about it because we've already used up some of that supply. If price comes back and starts rallying, there's a chance it's going to push in deeper into that supply or push higher. We don't know for sure. I'm only trading what I see. So this area, I'm going to watch price come in. If it's at the extreme, ideally, because that's where your stops, the safe bets to your stop to be here. If you was to take this whole level, you're looking only about a 3-to-1 trade. Okay. Now, if price doesn't reach here and it starts turning on the 15, you can still trade up to here, but you're more likely to be stopped out because you're kind of diddling a little bit in the middle. But I still trade these if the setup's there, but my trade management is different. If you're at the extremes, I normally go for target 50% move stop to break even, and then 80% once I get near, stop to break even, 50%, stop to 50% when I start to get up to 80% of the move. But if I'm playing in the middle a bit, then it's going to be different trade management. The reward to risk is going to be lower, or I try to drop in a really small time frame to increase that, but with the risk of being stopped out a lot more. So let's have a look at this candle coming down, because I only want to be looking for buyers at the moment. Let's have a look at what the structure is. We've got this on a 15-minute, similar to the euro dollar. So when I'm in here, I'm going to be looking for buys. I'm hoping we have a nice zigzag down into here, remove 15-minute or 5-minute. If that's a really, really strong drop, I'll maybe drop into 5-minute. So as long as the 5-minute supplies are being respected, and then we remove 5-minute supply, move 5-minute supply and the trend line, then a pullback for a double bottom, or there might be a rally-based rally that's removed it. So a flip zone. So we're either going to have a flip zone or double bottom, ideally, and if you get in quite low, put your stop below here. Just take a 4 or 5 to 1 risk rather than a 10 or 12 to 1 and the chance of being stopped out. Use the same amount on the position size, whether it's 0.1, 1%, 5% or 0.2. I tend to stick with below the 1% at the moment because I'm taking more trading and I'm using lower time frames. So I'm just trying to increase my skill on day trading. So that's pretty much the pound dollar done. Weekly. We come back to the weekly 240. Notice we are closing below, so we're trending down. So I'm expecting to trend back up from that level. Right, now I'm going to move a little bit quicker. In fact, let's have a look. I don't want to look for any opportunities that it's not really that good. There's loads and loads of, this is just range bound. If I was to do a really big analysis, the long term, I'm just going to look at the monthly and daily. Right, this was a close below this candle, but this was not inside candle, and a close below here. So there is something breaking. I'm going to put the high, these inside candles, and the I'm going to use the low of this one at the moment, only because this is kind of open and close also inside this one, even though that one was inside that one. So I'm looking that side, I'm looking that side. I'm going to use this low, and this is an area to look for longs at the moment. Okay, it is an area to look for longs, but what I'm being careful of is the fact that this candle, monthly candle, has closed below this, so it's not an inside candle anymore. Okay, so that means it looks like there is some kind of pattern break in here. So for that reason, I would remove this for the moment. I'm not going to look for longs here, because we've got this close that looks like now we could be rolling over, as in a rally, base, drop. Okay, the trend is down. So all I'm using these for is to go, well, that's it, I'm going with the trend. There was an A, B, E. Target then, if that would have been a trade, is down here. So there's still room for this to move to target and lower. So let's go and have a look at the daily. We've got a nice trend line down, but this is the nearest area of, why is it not drawing in? I do apologize. Sometimes my laptop does this. Hold on. I'm going to have to change this template a minute, one moment. Now I'll have to do the lines again, but you understand we're in a downtrend, and that was what I was looking at, that range at the low, the range at the high. We've got to be careful. The profit target, I'll draw that back in again. It's going to be around that area. So the line, we'll look at this area here, because we had a rally base. Yep, we'll look at that. Yeah, target 1, potentially target 2, very close. Right, so this is an area I'm expecting it to kind of come to. It's almost touched it. I'm going to be very, very careful here. But it could continue lower. So if I come to the daily, I've got this level up here. This is where I'd look to short. An A, B, potential E. It's not original because this is an inside candle. So I've used confirmation. That's all I would do with that. I can't see doing anything else, except we now could look, and this is, I don't like drawing this too much, but we've got this pattern. And we've broken out from the pattern. We're in the extreme area of potentially accumulation because of these inside candles here. And I would be very careful. I don't like to really short anywhere other than this daily level. Okay, that's pretty much the Aussie. We're not going to even talk any more about that. That's pretty much it. Not the cleanest one to trade. Let's have a look at the New Zealand dollar bouncing from this area. The actual safe area to trade is always going to be up now at these range highs and range lows. That's the big picture, okay, of what we're looking at. This is what's going on now. We've got a downtrend. Let's have a look at the daily. Let's refresh that. Come back to the daily. And we've got, you can see a bit of a range going. This is more of a weekly 240 range here. I can see already. But there's a break here. And we've got very similar setup to the Aussie. What I want to have a quick look at is this weekly. This weekly range. Yes, this is definitely, yeah. This area itself is, I'm going to go into the weekly and explain what I can see, because this inside monthly candle here, this inside monthly candle, this is an inside as well. Yeah, so we've still got that accumulation, and we're getting very, very low. So I'm going to look at the weekly. Looks like a drop base drop potentially, and we could be into a rally base rally. Yeah, longs, I'm looking for longs down in this area. This is what I'm going to say on this. If it drops lower, let's look for longs. It's a bit clear on this New Zealand. So what's the downtrend? Downtrend is on the 240. Look at this now as a bit of a hurdle, diddling in the middle. I think this is going to get taken out if we drop lower. If we do, we've got a drop base drop, so we need to take out that drop base drop. If price plummets into this area down here, okay, the extreme of the this downtrend, this is the breakout area that I'll be looking at, somewhere in this area. We go to the weekly, you can see it down here, breakout area. So if that's going to be the breakout area, there could be a reversal, but we're going against a trend, so my profit target and management is going to be different because I'm going counter trend on the big time frame. Okay, the weekly's in the range, so this is the area or below, because we could end up with a, I'll do that, we could end up with a fake out in this area, but because of the direction, I don't want to be fading a fake out. If we start to go below here, I'm looking at breakouts. So let's do it like this again. So now I've got my level accurately drawn. There's nothing I'm going to even look to the left to put a set and forget or reversal, because I think we'll just go through that like butter. So this is the holding area, and this is that upper end, this whole range. I'm going to draw it from here now, where I'd be looking to short. So if price got back up in here, then we could end up shorting. There could be a fake out to the left that I would look at, so I'll do that now. I would put a set and forget in this area. I'm going to just highlight that area, see if we can find something above there on a 240. There's nothing I can do. We've got this, the nearest strong area. This could be a fake out or liquidity sweep all the way up to here. We're talking big time frames here now, remember? We're not talking some intraday. And if I put that on the higher time frames, in fact, not showing all for a minute. That means if we go to the weekly, up here, technically is a set and forget. You can see it's not too far above this weekly, boom, up here. But I would watch for confirmation, and the only reason why is because we have got some inside candles around this area as well. So there's one big accumulation. But what I do like is the fact that these are starting to break lower, close lower. You're starting to get that close lower, but we're ranging. So the idea is to short. There's my liquidity sweep fake out above. This is where I want to go long. Maybe first target, if anyone's putting a target in, would be here, or manage it aggressively above. Let's have a look at gold for Mananas. And I'm looking at majors, but let's have a look, because Mananas is in this still. He's caught somewhere up in here. He wants to add position, not had a chance. So this is very similar to if we had a 3-month or 5-month chart. This would be the liquidity sweep area, but I would look for breakouts above and anything below this area for fresh and original levels to go long, because this is what's going on right now. We've got this, and it's the AB, the first touch, which is a good probability of reaching at least is 50%, because the overall momentum is to the upside, but we have got this big range. So up in here, Mananas was shorting. Let's keep going down slowly down the time frames now. So I'll do a multiple high time frame analysis. We've got the break. What was demand becomes supply. And this is where Mananas was getting in. Good analysis there as well. And now we're rolling over and moving down. So from here, this is a target that I would want to take off part of my position. If you can get back in, get in, but I would take some off there, some off here, go for there. It's almost like a free target trade if you want to be conservative, or you just go for this. I would personally start scaling out and then trying to get in, but then you're going to get stopped out a lot more. And a little tip on that, whenever you get back in, you should move your overall stop. So don't get in somewhere where you think market's not coming back to once it's been there. So it's kind of stop would be here. If we started to drop, come up, and create a, you know, how can I say, we drop, come up, create a level, drop lower, come back up. I want my stop above that level. I will be looking to add the position now on that weekly. Let's have a look at the daily. So now the daily is definitely on the downtrend, 242, but we'll do that. Very close to target. So I don't want to be short until anywhere up here because you might have that pullback. That's why I don't move my stop on these big time frames. If I was going from here to here, price has to move here before I move my stop to even break even. But being a range and going against the trend, the overall big trend, we've got to be a little bit more careful. So yeah, the only way I would manage to get in or anything would be up on this little level here. That's an area that might hold because we've got the A, B, E. Possibly, remember, there might be a little bit of a fake above sometimes. I always check that for traps as well, just general traps. But that would be an area that you could take some of your position off if you haven't already and re-add there. Then you move your stop above here or keep your stop above the highs, or stop above here, get out both positions, reaches up to the highs, potentially to drop back down again because that is the weekly high. So if your stop isn't above here, it's getting more aggressive. That's all it is. You're just managing it more aggressively. Nothing wrong with that. But I tend to take off some of the position in this case. Again, all this adding and taking, removing from position, there's so many trade managements. Depends on your analysis, how confident you are really. It's like a scale. Let's have a look on the 240 there. Right, we've got this. This is very nice to get in. Now you can see if you was to add here, I'm talking really with bananas, there is a chance that if you've built this position, you're just going to get stopped out, come up and then continue lower. So maybe trade this just individually. So the first trade, leave as it is, put your stop wherever you need to put your stop if you're looking for the big move. Remember, look at it as a monthly daily, and then treat this as a 240-15. So if you do get up into here and you take a 15-minute short, then take your targets appropriately down here, or manage it. If you want to manage it, if you take some off on the first target. But this is with the trend. I would get in here and I would be taking my profits somewhere in that region, maybe even slightly higher because it's a basing area, maybe slightly higher. But it looks fine down here. This is not demand or anything like that I would be looking to buy. So the target's going to be deeper. Up here, sell, down here, buy. Let's have a look at the dollar CAD now. Bit of a flag. This is an overall range. Flag happening in the middle of this big fuck off range. And we've also got this area that I spoke for last year, early in the year. I've removed these videos about buying. This is an A, a B, and an entry on the range. We haven't had the A, the B, or the E entry yet. We've got the A, the B, not the E. So I'm looking for a move up into here. I'll start to short. But this is what we've got at the moment on the monthly. We've got an inside candle. So let's just delete these. So I've already mapped in, but I'm going to put in a blue candle. So this is my little liquidity range area. It could break out, but I'm not going to be breaking out to the upside. I'd be more inclined to lean on that at the moment with a flag ABE, being careful that if price breaks, then I want to go with the breakout because it's a flag pattern. Okay, and we're above this. There's no, I'm not going to class this as a monthly, a free monthly candle or anything like that, to just watch this area to short or breakout. And if we come down here, breakouts to the downside, because this might be starting to come back down now. To break this to go lower, we could be rolling over. We don't know. So all I'm saying is this is a bit of a downtrend. It's a flag pattern. And this is the area of accumulation. If I go to the weekly, you start to see it. Look at the wicks. Look at the wicks. So we've got accumulation on the weekly. Inside candles, close above on the weekly. But then anybody following a weekly in 240 or daily or lower is not looking at that monthly. Okay. This could be a fake out above here. Fresh and original level. it looks like there might be. I'm just going to reduce. No, too much mess. Too much mess. They're not clean. Drop, base, drop. But this kind of touched. It's not so fresh. So this is an area where you've got to just look at it, observe it, learn from it. That may be confirmation in that. So the price breaks into that, there might be a reaction, and then be looking to come down. This is the fake out area on this weekly. Okay, more on the monthly. Okay, more on the monthly. If we start to close above here, especially if we're looking at monthly daily, if we get a close and it's into this level here, this is a trap area. This is definitely a trap area, and there's going to be a lot of fucking about in here. I won't be a bit surprised if it goes into some kind of rally base, then rally out or return back down. So it's the areas that we want to be looking to trade long and short. But first of all, moves up fast, and then it reacts fast. So I might look at a 60-minute candle, 60-minute candles up into here. Let me show you now. I'm going to really zoom out. So it moves up fast, so we get a beautiful 60-minute structure into this area, a break of demand and removal of trend line, pull back for a double top, stop above this level anyway, or a flip zone if there was a drop base drop, or a kind of drop, pull back up into that area. That's why I always pre-draw them on the Discord group. I've shown you what I'm looking for. I can project what I need to happen, and it has to happen quick, because then on the 60-minute, if it does break over a 60-minute downtrend, by the end of the day, using the timing rule, I could have a big fuck off wick, okay, like this. So it rallies into boom, boom. That's what I'm expecting. So if I get in on the 60, I'm going to manage it quite aggressively, or at least first part of the position aggressively. Then if it sort of comes back against me, I get out of half the position, stop the break even. If it stops me out, it's fine. You know, it's more likely to break out. I don't know. Or fuck about here. Let's have a look at the dollar yen. Dollar yen bouncing from this supply because we did take out demand. And the momentum on the weekly is also being sort of taken out, all this monthly momentum. And if we come back to that monthly, let's have a look at the candlesticks at the moment. Another inside candle. So we've got a lot of ranges or liquidity sweep areas above and below these areas. Okay, this is accumulation. So this is range bound already to me without even looking at the daily. Okay, big range bound market. I want to sell up here, I want to buy down here. If I'm trading in the middle, so if I'm looking at say 240, nothing wrong with that. It's a much lower time frame. My targets are going to be different. If I got in here and put my target down here, it could happen, but there's a chance that this comes up much higher first before coming down. So if I was to sell here, my target wants to be here. So if I was to sell there, that would be my target, because this could then decide to come back up. I don't know. All I know is that there is a setup, there is my target. I'm not going for the big one based on that. If this was up here or faking out doing it, absolutely, I'm getting in here, put first part of position off, say this area was up here, first part of position be off, and then manage the second. Dollar Swiss. I think this is all I'm going to do is the majors, because there's so much to take in here. So we've got a simple drop, base, drop, base, drop. And you'll notice, if you look, why we draw the bases on the inside candles. Okay, it's where the liquidity was, where the accumulation was, which is pretty much either lack of liquidity or loads of liquidity, okay, in the areas, but it's bouncing up and down, and everybody trading their strategies in here are not aware of that. You're in a phase of accumulation. If you want to be getting into the trending phase, oh my god, there's so many opportunities on all the time frames, lower time frames, just go with it. So this is what we're in, potential trading phase, where this is the open candle, okay, closed down, closed below this low, fantastic. This is a liquidity sweep, because this is one big fuck off range, big investment time frame now we're talking. Let's have a look from here as an idea. Big time frame with lack of by the looks of it, when price just dropped here, there was no buyers to right down the extreme, so this could move very quickly. It can move very quickly. Let's go down from a monthly to a daily, and we've got this incredible daily level here. I want to see if it aligns now, because whoa, dropped like a ton of bricks, created that monthly slash daily level just at the proximal line here. This is the bottom line, so let's have a look what we've got in any weekly daily ABE. Not really an ABE, so it might not reach this level. There is a little something going on in here that might align. I'm just going to have a look if there is a decent level. Oh, there is. Look at this. Set and forget. Love it. Found one. It's like fishing when you analyze. So if I zoom out, make sure that trend line is accurately drawn. This, if price gets up there, there's my set and forget. Now, by the time it gets up there, it might be over here. Look, if we do a projection of that, let's just say price starts to go back up from here, there's a chance that it's going to line. So this is a set and forget. So the dollar Swiss, I'm just going to put that right to the front here, because that is a limit order when I'm on holiday. Now, where's my target? Let's go to the weekly. Target's going to be down at these solid body candles. Let's have a look at the monthly. I might use the monthly a little bit. That rallies. Yeah. I'm going to put two targets in here. I'm going to put first target where we are. This will be a solid green candle if we rally. Second target down here. And entry is all the way up there. So when I do my set and forget, I'll probably split that level to 50%. There's two ways to enter this now. I've not really spoke about this to make these videos. If you're going to take, let's just for argument's sake, you're going to take 1%. 1%. I don't just take this whole level and go, right, 1%, 44 pips, work out my position. What I will do is take 0.5%, maybe the whole level. Maybe I'll take 0.5% here. So I just want to get in 25 pip. Now, if I'm around and price comes into that and makes entry and continues to the extreme of that level, remember that we're going to be the price will be below that trend line. Okay, the level would be sort of kind of hovering above the trend line now. Then I'm going to be watching down on a 1 minute chart, and I'm going to enter again the other half position, which could be up here on a break of a trend line and removal of demand. I don't even wait for the pullback, and then I put my stop, and it might be only 10 pips. So now I've got to put 0.5% at or 1%. If we're using 1% risk, 0.5% at 25, 30 pips, 0.5% at 10 pips, and that's going to then increase my overall reward to risk. So if we look at it now, and you took here 35 pip risk, and you went for that final target, that's less than a 10 to 1. Like, you need 350 pips. Okay, so if I took 0.5 up here somewhere, just getting to this target, and it's going to be 10 pips, it's going to give me a 19 to 1. Okay, so then I take off that position and let the remainder run, or take off the bigger risk, so to speak. So you've now got 35 pips off there, and manage aggressively down there on the other one. It's real, or manage them both aggressively, but or even off the 0.5, take off half the position and then manage it. There's lots of ways that trade. That's the fun part. In fact, this is the fun part of analysing. The fun is in the process. Once you're in the trade, is getting in that trading, letting it breathe is the difficult part. And when it's on its way, then it becomes fun, because you're now doing the process of analysis to manage it. So that's the dollar Swiss, and I won't even look at any more on that. Let's have a look at the dollar yen. We spoke about the dollar yen already, up and down. Let's go and look at the euro pound, very last one, on the monthly. Big. We can just do it. I'm going to do it from over here, but basically we've got this big. That was the fake out, by the way. over here of that into something else over here. That could be a fresh and original high. Should we have a look at it? I'm just going to put my line on where it faked out into, just this area. Let's go have a quick look. I've got no more data. Okay, can't see. Let's try on the weekly. It might show on the weekly something. See, that here could be a fresh and original daily level. There's a nice bit of candle there. This may have been a touch. It's not fresh. It might just be an original. But that looks like it could even be this one. Yeah. Anyway, that's what I look for. You see now, monthly. So we've got this big range going on. So let's go black. That one's gone now for some reason. Anyway, yeah, ABE's already played out, expecting it to reach up to here. Look at what's happening with when you're in a range-bound market. That's kind of been faked out, could be being removed. If you look at my, guys won't see it for who are on YouTube, but the ones in the Discord group, you'll see what I'm talking about. Remember when I was talking about supply and demand? Say fuck off the supply and demand on this monthly. This will be monthly, like 5 monthly chart, 6 monthly chart, whatever. You know, it's just gonna, it's respect a bit, then it's gonna get taken out, not respected, and you're gonna see that all over the place. So that was not respected here, that was not respected there. This was a little bit, then it wasn't, then these kind of were, then this one was, and now this one isn't. It's just madness. It's just crazy. So you want to be buying down here, selling up here. But I've already done the 1-2 E entry, would have been there. Nothing else, which has been months ago, talked about in this video as well, last year. That's it, guys. I'm gonna make another lesson video hopefully soon, or two, when I'm on holiday, if the wife lets me. And I'm gonna get this video uploaded now. So that's it. I'll see you after my holiday. Take care, chaps.